and we'll go over the prior week of, well, I guess the last week of January, ending January 31st, as well as expectations for the coming week that we got ahead and what we could see from a overall market standpoint, right? Some economic standpoint, some news aspects, as well as um, we'll do some profile analysis to get a better breakdown of my expectations for the coming week. So it's pretty jam-packed, right? This is generally what we do on the weekends to get us ready for the week ahead, bearing in mind that very deep into a Trump, well, not very deep actually. We're just the beginning of a Trump market, which is going to be a pretty big topic of conversation for today. So first things first, let me see here. First things first, let's just go over the news from last week and then we'll break some of the information down because there was some news on Friday that we saw here. Why don't we just make this the full screen for now? There was some news that we saw on Friday that pulled things down a little sharply, right? And all of this revolves around the main topic of conversation today, which is going to be tariffs, trade wars, and things surrounding that aspect, because that is currently the regime that we're in. So Trump coming into office not very long ago has really shifted the tide of what's going on right now. So there's a lot of news, and I'll give you kind of the point form to begin with, and then we'll take a look at it from a deeper aspect. So the point form from last week, we had DeepSeek news that came out, right, where we nearly got a limit down move on the overnight Sunday, January 26th. Market recovers all of the DeepSeek scare. We tried to move into a new all-time high by Friday, but right, we get tariff announcements throughout the week. Trump announces 25% tariff on Mexico and Canada, which would be effective on Feb 1st, which is yesterday, and says they can do nothing about it. He also pulls back on Canadian oil tariffs to about 10%. Fed keeps rates. We had a Fed meeting on Wednesday. They keep rates at 425 to 450. It's the first meeting of 2025. The PCE data also comes out, which is the Fed's favorite inflation gauge, comes out at 2.8% year over year in December, accelerating from the 2.7% in September. And we also got some of the GDP information that came out. U.S. economy grows 2.3% in the fourth quarter and 2.8% for the full year, ahead of the 1.8% Fed forecast. We also had major tech earnings, along with a few other pretty large earnings reports throughout the week. But the main piece of information that we were looking for from an earnings perspective were Microsoft, Apple, Meta, and Tesla. Right, three of those came out on Wednesday after the Fed, and then Apple came out on Thursday after the market closed. So those are the main aspects of news that came out. We also saw that Canada and Trudeau are hitting back with tariffs, and like I said, one of the biggest topics of conversation today is going to be the trade and tariff back and forth, mainly Trump's plans and decisions going forward, and how that actually reflects what we saw earlier in his first presidency. But first, let's just dive into some of the news, right? Organize ourselves a little more. So we saw a pretty volatile week, mostly lower realistically, but that's one of the aspects, right? We're going to have to get used to volatility. If we haven't seen a Trump market before, not traded a Trump market before, don't understand what a Trump market is, this is the epitome of one, right? Some days look good and bad, some weeks look good and bad, but volatility is there to stay for the most part. So the Dow Jones Industrial Average rose modestly to notch its third straight week of gains. Tech-oriented Nasdaq experienced particularly steep drop on Monday, driven by the sell-off in tech stocks in response to the emergence of DeepSeek, a Chinese AI developer. DeepSeek released a new open-source large language model and reportedly requires much less energy and processing power than other leading AI applications, leading to a competitive concern in the broader AI space. And that news led it to Nvidia shares falling nearly 17% on Monday. So this is big tech over here. You can see Nvidia, Apple, Microsoft, Meta, Amazon, Google, and Tesla. The Mag 7 here, and this, I don't know why it's not loaded, but it should reflect all of them. Anyways, earnings season also continuing to roll along, right? A lot of with companies representing approximately 40% of the S&P's market cap reporting results during the week. Several positive earnings surprises and upbeat forward guidance, particularly from notable large cap companies including Meta and Apple, appeared to be the tailwind for stocks late in the week and help major indexes recover a lot of the earlier losses. We continue on with tariff risks. The second week of the Trump administration also brought a slew of political headlines that appeared to influence sentiment, right? Particularly regarding the administration's plans for global tariffs. President Trump also reiterated his plan to impose 25% tariffs on Mexico and Canada, the US's top two trading partners, by February 1st, while also threatening to levy an additional 10% of goods or tariffs on goods from China. This also comes after the prior week's comments from the president, which seemed to give investors hope that he would take a softer than anticipated stance on global tariffs. We also saw that the Fed came out and Jerome Powell had held rates as is between the 4.25 and 4.5% marker, also giving way to potential policy shifts and more so a lighter approach and more of a dovish, I guess, talk throughout the Fed announcement. So we saw that this was the first meeting of 2025. Everyone expected them to keep rates as is, and according to the Fed's post-meeting statement, the U.S. economy activity has continued to expand at a solid pace. A lot of the information and statements that were called out by Powell were fairly dovish / bullish. He also talked about the labor market, and labor market conditions do remain solid, and inflation remains somewhat elevated. So that was one of the bigger concerns. In a news conference following the meeting, Fed Chair Jerome Powell stated that the U.S. does not need to be in a hurry to adjust its policy stance, that it would need to see real progress on inflation or weakness in the labor market before making another rate cut, suggesting that the central bank will likely keep rates steady in its next meeting with the expectation. We didn't see a dot plot this time around, but with the expectation about like 2 to 3 cuts by the end of this year, which is much less than initially anticipated going into 2025. Also, some banks are kind of leaning towards 0 cuts this year, and some banks are even leaning towards hikes this year, which is crazy to me. But the Commerce Department's release of its core less food and energy personal consumption expenditures, the PCE price index, on Friday morning appeared to support the Fed's comments regarding elevated inflation. According to the report, core PCE, which was the Fed's preferred measure of inflation, rose 2.8% year over year in December for the third consecutive month since accelerating a tick from the 2.7% in September, and which is a lot higher than the 2% long-term Fed target. So with that, right, the main piece of information was what is going on with these tariffs. So it's pretty much an all-out movement by Trump in terms of tariff news. That's pretty much what's moving the markets. Obviously, we saw the DeepSeek stuff that moved the markets, but that quickly got subsided. And there are a lot of comparisons going back and forth, right? Some people were comparing the most recent market with what happened in 2017 overall. A lot of people are comparing it to 2001, 2008, right? Anything that you can imagine. So 2017, just to give you a little understanding of what happened here. 2017, we opened up and we just had this like continuation throughout the upside swing. Now, 2018 and 2019 is something that is a little more, I would say, comparable to the current situation. Maybe not in terms of market movement, but overall, right? I'm just going to group it together. So this is 2018 and 2019, right? So from the start of 2018, right, by the end of 2019, the market had only risen about 17% on the SPY, but had a lot of potential dip opportunities that, right, if you're looking at it from that perspective, right, you have a 23% rise, and then you have about a 32% rise from those lows. But that's not my point. My point is, like, throughout a Trump presidency, we had a lot of volatility realistically, right? Volatility was there to stay, and I think that is a widely accepted expectation for this current presidency. And the reason why a lot of people are starting to look at this from 2018, 2019 potential movement is that, because if you guys remember what happened in 2018, January 2018, right, an economic conflict began between China and the US, right? When President Trump began setting tariffs and other trade barriers on China with the goal of forcing it to make changes to what the US says are longstanding unfair trade practices and intellectual property theft. So that kind of action and escalation went back and forth, right, for many, many years, especially when Trump was president. In 2024, the Trump presidential campaign also proposed a 60% tariff on Chinese goods on February 1st. Nonsense. It can't be the 10th. February 1st, 2025, President Trump also increased the tariffs on China by 10%. So this is a very similar situation because Trump is going a America first kind of approach. and he's starting to push with its other massive trade partners, which happen to be Canada and Mexico, right beside them on either side. So he said on Friday that he would impose a hefty new tariff of 25% on goods from Mexico and Canada and 10% on imports from China. And nothing could be done by these three countries to forestall them and push them back, right? There were talks about these being in place on March 1st, but that hard hitting reaction on Friday was most likely due to this, right? Trump did, however, reference a potential carve out for oil from Canada, saying that it would be at a rate of 10% versus 25% for the other goods for the United States, right? But he indicated wider tariffs on oil and natural gas would be coming in mid-February, and those remarks also sent oil prices a bit higher. So Trump has been threatening tariffs for weeks now, saying that they would be imposed on February 1st and remain in place until the countries did more to stem the flow of both migrants and fentanyl over the border of the US. And we saw that markets naturally reacted pretty heavily to this, major disruptions as well. So economists and business executives have warned that tariffs would spark an increase in the price of imports such as aluminum and lumber from Canada, as well as fruits, vegetables, beer, and electronics from Mexico, and motor vehicles from both countries. And Trump again spoke of collecting hundreds of billions of dollars in revenue from other countries, but economists generally say that tariffs are paid by firms that import goods and pass the costs onto the consumer to accept lower profits. So President Trump's tariffs will tax Americans first, said Matthew Holmes, a policy chief at the Canadian Chamber of Commerce. From higher costs at the pumps, grocery stores, and online checkout, tariffs cascade through the economy and end up hurting consumers and businesses on both sides of the border. Trump's move is expected to draw retaliatory tariffs, potentially disrupting more than $2.1 trillion in annual two-way U.S. trade with the three trading partners. And we also saw that Canadian Prime Minister Justin Trudeau on Friday said that Canada would immediately respond with forceful countermeasures, adding Canadians could be facing difficult times in the coming days and weeks. Canada has drawn up a detailed target for immediate tariff retaliation, including duties on Florida orange juice, a source familiar with the plan said. Canada has also a broader list of targets that could reach $150 billion worth of U.S. company imports, but would hold public consultation before acting. So the Mexican president said that they would go in with a cooler head, but let me see, where was this? I want to read this. Canada, right, has announced its retaliatory tariffs against the US in a move that marks the beginning of a trade war between these neighboring countries. Justin Trudeau set out far-reaching tariffs of 25% affecting 155 billion Canadian dollars worth, or 106 billion American dollars worth of American goods, ranging from beer and wine to household appliances and sporting goods. The move matches the U.S. President Trump's 25% levy on Canadian and Mexican imports, with an additional 10% on China, like I talked about. So it's already beginning. Like, my point here is that this kind of like back and forth between major trading partners and what had happened in 2018, 2019 just created a shitload of market volatility. Now, this doesn't mean that we're going to enter a bear market and everything's going to go insane and blow up in everyone's face, right? I think that's an over misconception about what's going on here. I think that these trade and tariff news events that keep coming out are immediately bearish, right? They affect the consumer very heavily, right? Generally, that's how tariffs work. But at the same time, realistically, I don't necessarily think that Trump is someone that's going to let this market just completely explode. I think that if you think that this is what's going to cause the next massive downside move or bear market in the market over the next few years, I feel like you're sadly mistaken. I think that overall, realistically, these tariffs and all this news that's coming out is bottom line just going to create volatility and downside momentum that most likely is going to be buyable. Earnings are still strong. Economic growth is still strong. We do have a problem with inflation, which, again, he is pestering Jerome Powell to take more of a dovish stance. But ultimately, what does that do? That turns inflation even more cyclical than it already is. So if you have aggressive rate cuts while markets are continuously pushing into all-time highs and a tight labor market, what happens from that perspective is that inflation starts to creep up again, right, with these ultra low rates that may appear based on what Trump would want ideally, but I don't think that's going to be a factor. I think that Jerome Powell and the Fed started cutting a little too soon, and they saw that there are still issues on the underlying data points. So they're kind of pulling off right now. And I think the best thing they could do is pull off completely until they get kind of more of a flat line with inflation, especially with this tariff information that's coming out. They're really going to be a lot more cautious with rate cuts going forward. I think that in the event of even a potential rate hike, if inflation gets too notched up from all this, that would send the market decently lower, and that volatility is going to come in. I think ultimately, though, we are going to see some decent upside, but it's just going to be a tougher battle. I'm not saying buy every single dip, but I think that overall in this market, if we're comparing it to what happened based on news with all these tariffs from 2018 to 2019, you can see towards the end of January 2018, we got this larger down move about 10, 11%. You look at this by October of that year, we peaked out and we dropped about 20% going into January, right? The beginning of January 2019. I don't necessarily think that there's going to be such a magnanimous pullback this year in terms of something to the tune of 20%. But I think that 10 to 15% is a possibility. Volatility is most likely going to be injected into this market. And if you're just like constantly buying everywhere, I think that might be a bit tough. I think that day traders are most likely going to benefit from this volatility over a lot of swing traders. And there are going to be general bottoms, larger bottoms that do appear in the market that present opportunities for a larger move going into next year, a potential blow off top. But I do warn that the volatility aspect based on this tariffs and this back and forth trade war stuff is there. I just don't ultimately think that this is going to be something that corners the market and creates this like massive backlash that creates a massive downturn in the markets. Remember who you're dealing with here, right? This president is Trump. It's not someone that's going to be like, oh, okay, the stock market's starting to go down drastically, right? I'm not going to do anything about it. It's not going to happen. Most likely, if we do see those 10, 15, 20% pullbacks, 20, I'm a little less likely to pull myself towards. But if we start seeing that like 10-15% pullback, I think that the Fed starts acting a little more at that point, or just in general, right? You're going to see Trump pull back on these tariffs and not go as crazy with them, and you're going to start to see this like general upside momentum. Now, I don't think that throughout the whole presidency you're going to see just magnanimous upside, but I think ultimately that's going to be the end goal. So if I take a look at what's going on with my expectations, right? We'll talk about the bigger scheme of things and we'll talk about what I've got expected for the week. Because this week, with all this news about tariff stuff over the last few days here, I don't think that we're in for a pleasantly bullish week. I think that we're going to gap down pretty severely once this thing reopens in about 2.5 hours, give or take. And then we're going to see how the buy side wants to come in at potentially lower prices because there are a lot of poor lows that need to be swept over the last few weeks. And I'll show you something pretty interesting here before we take a look at news. What is this? Weekend Wall Street. I don't know if you guys are familiar with this, but Weekend Wall Street gives you a decent general idea of what's going on with the expected movement that has happened on the weekend. So if I look at this, like for example, we'll look at the hourly chart. I don't even know when this is from. Like I'm not getting any data here, but for example, right, so far, quote unquote, right, the overall market, probably that's something that's more representative of the Dow Jones, is down about nearly 0.9%, right, from the reopen on the weekend. Realistically, you can see this is an hourly chart. So I guess this is a daily. Sorry, this is a daily chart. Nope, that's the wrong one button. Sorry about that. So the hourly chart, right, you can see once February turned, okay, this makes a little more sense. So this is February 1st on Saturday. Once we had started, it's just been constant downside momentum where the Dow, I guess, is like down 1%. Let me see if I don't know. Oh yeah, it's DJ, the Dow Jones. So it's down about 1%. Realistically, I don't think that we gap down 1%. I think that there is going to be a gap down. Where it's going to be, I'm not fully certain, but we can take a few educated guesses here when we talk about the breakdown of what I expect throughout the week and where we are right now. Because when we have this kind of like turbulent news and volatility, I don't think it's a very long-term thing like the DeepSeek stuff, right? I was looking at, okay, yeah, you drop down, but like you're starting to get these things that we call failed acceptance at TradePro, where you start to get a move and closes above these distributions which put bullish pressure in the market. So even if we gap down, I'm not going to be one to be like, oh, buy every single dip. But once we do start getting that turning point, that's when we start getting a little more active. So in terms of news this week, before I'm all over the place right now, but in terms of news this week, this is a full week of trading as well. So out of the U.S., you don't have anything too crazy on Monday. Tuesday, again, you got job openings, you got some crude oil inventory, some non-farm ADP non-farm employment changes. On Thursday, again, you don't really have too much unemployment claims, right? That's going to move the market pre-market a bit. And then we have the non-farms, right? The non-farms come out technically the first Friday of the month. So we're going to see non-farm payrolls come out on Friday. That's going to be pretty important considering the labor market concerns. Now, another thing, we had tech earnings last week, and shout out Earnings Whispers. You can go check them out on Twitter and whatnot. But this is where I get my news for earnings, see who's popping this week. And Palantir is up pretty nice. We'll see what they do on earnings. We got PayPal, and then we got AMD, Alphabet, so Google, Snap, Chipotle, but Google and Amazon are going to report this week, leaving only Nvidia out of the Mag 7 in terms of earnings. So this is going to be a pretty important week in terms of earnings, starting pretty much on Monday. We want to see what Palantir does. Not that that can move the market completely, but going into Google and Amazon, right? I think that people would want to pay attention to that a little more. Now, going back, let's just start doing analysis right now. Enough of this precursor news, but overall, what we got going on here is we have two scenarios that I had talked about at the end of 2024 in terms of how I think the market's going to shape up. The first scenario was the green line, where I expected a deeper pullback towards the end of the first half of 2025, right? Potentially at the end of Q1, where we have more of a significant pullback after we do peak a high around 630. I'm starting to think that this is going to be a much, much harder target to achieve based on the volatility that keeps coming out of this market. I still am under the impression that probably maybe the end of Q1, beginning of Q2 gets fairly rocky. In terms of market movement, where we do see a move, my general target is around 540 to 550 on the SPY before we start to see that potential upside swing. Alternatively, we just have a very, very volatile year, kind of like 2018 when Trump started bombarding China with a trade war and tariffs. So this larger range realistically might be from, well, it might be a bit lower, but it could be like a 10 to 15% range overall. If we maybe grab the bottom of it, we could say somewhere even like, I don't know, like 560s in the top, somewhere at like 630s potentially. We're moving in a 10 to 15% range. I think that that becomes more of a probability this year, especially with volatility. I would like scenario one to play out regardless of what happens. If I see a 10 to 15% pullback in the SPY, this is my trigger to get long. Like that's pretty much the plan this year. If I see a significant pullback, I'm getting long. I'm going to get long a bunch of stuff, but right now, I don't think the path is continuously buy these dips on swings. I think that we're fragilely extended to the upside swing. And one of the biggest concerns for me is tech, right? Tech and the breadth in tech is like super weak. We either get an all tech rally, which I don't think is going to be the case right now, or we get a decent pullback in tech that creates a bottom and then we start fishing out better movement. This is perfect because this allows these quote unquote stretched valuations to get a little unstretched. And I think the real stretch number of these valuations is a lot lower than people think. But you see names like NVIDIA losing about $600 billion, right? Over $500 billion in market cap in a single week, realistically, in a single day, even. So, yeah, you might look at it from the perspective that, yeah, these valuations are a little expanded. So I think that what makes the most sense right now is to wait to see if these guys can bottom out with all this volatility, specifically semis and tech, big tech, to kind of take that kind of a beating and start getting extremely oversold. That allows us to look at this from the big tech rally perspective, because tech has been slowing down and pulling back a lot. It's been lagging in comparison to its other counterparts over the past half a year plus, I would say. So I think that these valuations getting this extremely stretched allow, and all this news surrounding volatility allows for tech prices to get into more fair areas realistically. So if we take a look at these from a more granular perspective and take a look at the big indices. So let's look at SPY. I'll do it on this little screen here because the other one you saw there was a lot of shit on it, but doesn't mean there's not going to be a lot of crap on this one. Anyways, so this was my general thought process on SPY over the last few weeks, right? I was looking at it from the perspective that around, I guess, that 580, maybe 578, we would catch some kind of a bottoming and shoot back up to create a new all-time high, ideally getting close to 620. We did peak a new all-time high temporarily, and then we started seeing a lot more volatility. DeepSeek comes out, gaps. Gap gets filled, immediate rejection, new tariff talks. Here. If we're looking at it from the futures perspective, which we'll do in just a bit, but like if I look at this, let's say like 1%, which I don't think that we just open up 1% lower until maybe tomorrow. I don't think the futures gap down 1% right away. They can't just continue going down. But like let's say we open somewhere around like 595, right, tomorrow on the SPY. Honestly, at that point, like I'm not gonna be one to be super excited to be like, oh, let's buy all these fucking dips. Like I don't really like the idea behind that. I think that at that point we start trying to fill some of these lower gaps, and it doesn't make sense to me to be like, okay, like this is a low here, this is a low here, this is a low here. No, I'd rather wait to see if prices can move through an auction to the upside so that we can get that acceptance and start pulling back up. So I'm going into this week right now on the Sunday. My expectations are for some downside. I think like Sunday's a little more volatile. When we reopen, we're going to see that market get pulled to the downside, which is going to open up some a little more sell side press, and then we can see, okay, where can we actually bottom out? Because SPY has left a very significant gap, and I'll take a look. I'll show you what it looks like on the futures because this is a very very important gap area that I was dying for it to fill after we moved back up after some of this news, but we never got it. So I think that this is potentially our time right now to fill that gap, which is somewhere I would say closer to like 587, 586 on the SPY, and then start turning around. So if I look at this from like an hourly perspective, so we can get a little more juice in the profiles here to give us a little more of a breakdown of what's most immediately happening. We can take a look at these most immediate profiles into these all-time highs. These are the only profiles that have traded. So like if I look at this is one general distribution, right? This is one of the bottoming distributions. You can look at this as one of the minor distributions. Whoops, poorly drawn. This is one of like the minor distributions, and then somewhere up here, right, you have the top of this barrier. So realistically, the way that I see this is we're moving back within this major distribution, right? That happened on Friday. This is bearish in itself. So Friday's close could have given you a little more of an understanding that you were probably going to see a little more downside. Realistically, I think that somewhere around here, this area between 586 and 587, maybe 88, somewhere between there on the SPY, becomes a more comforting region for the buy side to start stepping in. Now, I'm not fully going to be trying to identify where the low is. The way that I see things is that it makes a lot more sense for me to be like, okay, if we get this move down, if we start getting like, let's say we get a move down all the way down here again. Once we start getting closes within higher distributions, that's where I trigger long for a better confirmation of sentiment. So if I can trigger long from that situation, which happened here, right? It happened here, it happened here. If I can trigger long for that, right? If I can catch it a little earlier, I can get that anticipated move that swings back up rather than me being like, this is a bottom, this is a bottom, this is a bottom, this is a bottom. Fuck, I have no more money left, right? Like I don't want to be doing this necessarily, unless they're at like key distributions, which I have the expectation. This is probably one over here, but I don't know. Will we get that low? One of the issues is that we have a lot of poor lows, so we might sweep a lot of these lows, especially with the volatility that comes out. If this is indeed the turning point, we have a shit February of a 10% pullback, fine, whatever, that's fantastic. 10 to 15%, like I'm going to be looking to get long for that swing going into the end of the year. I think it's going to be a gift. But I don't think that necessarily happens. I think that these are just like threats of like 25% tariffs going back and forth. Um, even if they're factual, I don't necessarily expect markets to be like, oh shit, we're going on a 10 session downside move. Again, valuations, yes, they are stretched. However, earnings are pretty solid. Growth is pretty solid. There's a lot of things that are telling us that we're not in the worst financial position ever, right? To elicit a massive downside move. Internals are fairly okay. So the way that I see this is I honestly expect the SPY to start moving towards that 585 area. And I'm not going to be one of those guys to call the bottom this week too much. I don't think that it's super reasonable. Maybe, right? We see 572. But the way that I'm going to be looking for that turning point on the bull side is if we start closing above distributions higher, being like if we move under 587 and we close back above it, that's pretty bullish. It's very bullish if we close above 590 after moving below it. So I'm going to keep an eye on that perspective, but we're going to gap down. I think there's going to be a little more downside. I think they just get people scared, shaken up, and then we start catching the bid. It'll make a little more sense as to where that low volume is when I show you the futures volume profile. But for now, let's take a look at breadth. And breadth isn't like this is the issue that I had with breadth going forward is that it was pretty weak, right? Like we had like a pretty strong rally. We actually moved into all-time highs, but breadth on this is the SPY breadth, by the way. Breadth on the SPY remained kind of mid-ground slash flatlined. We didn't really get too oversold. And initially I was looking at it from the perspective that we can get into that overbought territory, right? Or sorry, oversold is down here. We can get into that overbought territory. It just seemed very weak for markets, just like gapping up every single day, and we didn't like completely run up. So there were a few concerns then, and I think that those concerns still stay. But it's okay because I don't think that we get extremely oversold. And if we do, I think it's at a higher low for these markets this week, and then we can see kind of what happens there. But again, like we saw with the failure around 610 area on the SPY, too many failures of that area, you're going to eventually get a sweep lower. So when I look at breadth right now, long story short, it's weak. And I think that there's a little more weakness in the breadth. And when we get these runs up, like we recently saw, we're not pushing into extremely overbought. You can expect a little more of that weakness. Tech breadth was fairly strong, right? So that's why I was looking for that tech rally overall. But again, right, I think that we just need to start moving into better valuations at lower prices so that we can get that push higher. Speaking of tech, why don't we take a little trip to the triple Qs, the Dow Jones, and the IWM. So triple Qs, right? Next up on the list here, what we got going on. And I'm not really going to go over too many individual stock names this week because I don't like number one, we're going through an earnings season. Number two, I don't really think that there's that many buyable opportunities, and I like to go long on swings. The ones that I did have were Apple AAPU, which was a double X leverage. It went up 25% after earnings. So I like that for a nice little trim. Also got NVDL, right? And I'm looking areas to add into NVDL on NVIDIA, but I think that NVIDIA honestly has a target of about $108. Anything under $90 on NVIDIA for me is a gift realistically, but I'm going to start opening up my horizons if we do get a larger pullback to some of the other names. VRT is one of them that I put on the list, bought some on a long-term basis, but I have a lot on the list right now that I'll share with you guys once we start getting deeper pullbacks. Some of them are AI agents, other ones are going to be luxury brands. Other ones are going to be pretty boring names, but like right now, I'm just like kind of swinging small size here and there on tech, and I'll probably just swing options on SPY and triple Qs this week, or like few little day trades because I think there's going to be good volatility, which increase the price and premiums of options. And I'm not, like I said, I don't think that right now is the best of positions to start layering in into massive swing positions and with the expectation of big swings. I think that right now, volatile markets, day traders win, specifically around futures because they're delta one. There's a lot of opportunity there, and I think options, right, have some kind of ground in them too. But opening up big positions on swings, I don't think that's the move. I think that day trading futures right now with this volatility is going to be a lot more splendid. But anyways, We'll talk about that a little later. We will look at tech. We'll look at big tech names, but I'm not going to be looking at individual names to be like, oh, okay, this looks like a long or a short this week. I think there's going to be some downside this week to start things off. So big tech, right? We fill the gap after that deep seek drop. We have lower highs here on triple Qs, which is a little concerning. Continuous lower highs, lower lows, kind of higher lows over here, sure, but generally these lower highs have been created. So tech is a lot weaker, obviously. Nvidia is a huge market cap. It lost about 17% after that DeepSeek stuff. We had a massive downside move on Friday on big tech, right? I think we topped out, I don't know, 532 almost, and we bottomed out 521. So like about 10 points, nearly 2% of a drop on triple Qs. It's not really a game, right? That's not anything small. And this downside is going to continue. I honestly do think that we probably undercut that deep seek low this week. I think that's a pretty big expectation for triple Qs and Nasdaq in general, where we could start moving. Like I don't know if we undercut this low, but I think that the downside would want to try to undercut this. I've got this area over here that sticks out from about 516 to about like 513. That's going to be a major region, 516 to about 513 on the triple Qs. I think that's a decent region to potentially present a higher low. But like I said, tech is expected to be weak, right? Number one. Number two, massive downside move in comparison on Friday compared to the SPY. Number three, the best way for me to be long is to wait for different auction acceptances. So like a failed acceptance. So if I look at this is like the main area here on triple Qs. This is another distribution on triple Qs, which are trying to move below into the close. We're gonna open up below this, like almost 100%. We have this auction, then we have this auction down here. So like, I think overall, this auction down here, whoops, this one over here makes the most sense to be some kind of major bottom. But right, you can see if we start moving into this one lower, right, so on and so forth. I don't really want to be a buyer until we start closing back above or back above. So we're probably going to be trading between 510 and 516 very early on in the week, which is this distribution. And then from there, right, if we start moving back above that 516, that's what's going to trigger my long side potential. I don't know how deep we go, but as long as we keep accepting these auctions lower, you're going to see the expected move to the downside more and more, right? I don't know where we're going to open up on this gap, but it's going to be pretty interesting to see. Let's take a look at Dow Jones, because Dow Jones was having a pretty decent week, right? We got almost gone to all-time highs, and I really like this because Dow Jones, the way that I view it is it's a good it's value, right? It's generally what we call value, quote unquote value. It's a good leader for the SPY for most parts, right? And has, right, once this thing starts triggering to the upside, you have the expectation that SPY triggers to the upside. Once it starts triggering to the downside, you have the expectation that SPY starts triggering to the downside. So what I just showed you guys, the DJI, here, let me whip it up again. The DJI Wall Street, weekend Wall Street. So this stuff, you can see the DJI here, it's continuously dropping. It's down about, well, we looked at it, it was about the same actually, negative 0.88%, but it's down about 1%, right? So if the Dow Jones is actually down 1% pre-market here, which I find a little hard to believe, but we can take it with a grain of salt, right? Let's say 0. Oh, that's too much. Let's say somewhere here, right? This is where the Dow Jones is gapping down. It's not crazy if we reopen there, but the gap down like that on the overnight going into Sunday, I feel like that might be a little aggressive. But I think that if we don't turn things around by the morning, we're going to start to see more downside, right? And again, like I said, I'm not trying to be like, oh, okay, this is going to be the bottom. This is going to be the bottom. I would like higher lows. I would like for some of this gap to get filled, clean up some of these auctions, and then we can start catching a bid. But the best way to catch a bid is going to be based on auctions, right? Where I define where the distributions are. And if we get a move like this generally, once we start closing back within balances we had left behind, that's what triggers the bull side for me, right? That's what would trigger the bull side after expanding lower. So right now, I think that there is some like downside momentum on Dow Jones. I would not want to see it down here, right? Like at like 428. But if we do and we start getting close above 432, like I like the longs on Dow Jones again to see if we can actually break this high because this failed high right now. It's a little concerning to be honest. IWM, right? The runt of the litter, this small cap shit box is going to open up drastically lower. I would assume honestly, and I'm not trying to play ball with this one. I'm just watching it for now, so we'll just leave it behind. SMH, SMH is another important factor and like big leader overall. That it's the semi ETF. It really shows us it shows a strength in a sense in the overall market. It helps lead SPY, what I've noticed based on correlations. It's a good strength indication of SPY and the movement to the upside. And lo and behold, we pretty much fill this gap over here that I was like dying to fill so we can close above the 260 for the ones, right? And then we just immediately get deep seek, and then you see what's it called? Semis get absolutely annihilated. So I'm like, holy shit, okay. So this is just continuing in this massive range. And until this doesn't break out and actually hold above this area 260, like I can't be looking at the SPY and the triple Qs and being like continuously buying this shit and letting it just run higher and higher. It's just probably not going to happen. Let's be honest. We got extremely oversold down here around that 235 yet again on SMH, and we're trying to move higher. But this is too drawn out of a game where we have failures to the upside, right? Two continuously, slightly higher highs, but every time it just gets shut down. So if we just get this like massive downside sweep and we start trading into this balance over here, we clean some of these auctions up. Honestly, I would feel better about that to push back above 260 than this garbage continuously trading 235 and rebidding. That's why I'm a little more bearish on big tech, as well as not only big tech, but like semis in general, getting a sweep to the downside on NVIDIA and seeing a little more downside momentum before valuations kind of flatline and people are looking at this being like, okay, like fair enough, we'll start buying this shit again, especially big money. So I think that big money had been piling into big tech recently, but I think overall they're waiting for better prices, and whether that comes at the end of Q1 or right now, I don't know. But when it does come, when we get that 10-15% pullback, that's where I'm going to be standing and hunting. I think that a lot of people got long going into Friday as well as going into last week. So we'll see how that big money plays out. But like I said, gap lower, I don't want to be a buyer until we flip the balances higher, right? So immediately I'm expecting downside for the week, right? To start things off specifically, right? But I do expect downside to come out throughout the week. If we take a look at gold here, gold futures are on their way. They made a new all-time high. Someone in our group was talking about all-time high gold, right? Fantastic trade there. I'm not much of a gold bug, but like I said before, I do want to be long gold. I'm just waiting to see a more reasonable pullback. And the fact that we created this distribution down here, I think that's pretty fair. But if gold gets a decent pullback within any of these two distributions, I think it's an opportunity to get on the long side. I think gold does extremely well this year as well. And I think that precious metals in general have a good year. I'm just fairly concerned about what's happening with crude oil because we've seen failures continuously at this like 80 marker. We keep getting oversold. I keep buying between 60 and 65, but I don't see the fruits of my labor above that 80. So as much as I do like oil above 80, I think that if we're not creating higher lows around this major POC between 68 and 70, if we can't create a higher low there, honestly, I'm just going to abandon the idea of this going higher. But I think that we should want to hold around 70, maybe 69, and see if we can get that move back into that 80. That's something I'm going to be watching for potential swing most immediately. But right now, with that, I don't really want to touch it too much. If we look at the 10-year here, 10-year, what we had marked at the beginning of the year was we expect upside to be capped between 4.7 and 4.9 in terms of what's it called? In terms of the US 10-year, which would put some upside pressure in bonds. I think that it's a bit tougher because this thing's been rallying while the Fed has been cutting rates. And now that they're not going to be cutting rates, I'd assume that this would just allow this thing to keep going higher. But I think that its expectation of inflation concerns and more elevated rates kind of push it into these territories. I think that it's somewhat at a fair pricing right now, but I would want to see it start creeping lower, especially under that 4.1%. And I think that we've temporarily at least topped out, which could put some upside pressure in bonds like TLT. So that's my viewpoint on it. I don't think that we go back above 4.7 for the in the most recent movement, but again, right, that's it's a tougher one because this one's holding out extremely well. Now, in terms of the other news, like I said, we'll go through the big tech names and we'll go through them one by one with my thought process on them. We've seen a majority of earnings come out, but Nvidia number one over here. So the way I see Nvidia, I like it for the longer term. I like AI agents for the longer term. I don't think that the AI bubble has popped. I think everyone that's looking for that and saying, oh, DeepSeek just destroyed everything is incorrect. And I think that there's going to be a decent flush in tech to the upside once markets actually get their quote unquote fair valuations and bottom out. But my main issue with this is that it's at this like distribution low, is trying to hold out these prior auction low areas. I just think that we get closer to the top of this auction before we can find some kind of bottoming. I think that there's short-term downside on Nvidia is just still battered by all this news, especially around DeepSeek. So I'm looking at it as I've added some NVDL, nothing crazy, a small starter position. And honestly, right, if we get into this main distribution block, this is my main long zone for Nvidia. I think if we trade 87 to about $93 on Nvidia, we have the potential to 2x that price target this year alone. Again, my thoughts, personal thoughts, but I think that this is a major buy point where I'd like to see prices. I just don't know if they get there. That's why I added a bit of it here. I'll add a bit more into 108. And then if we do get this area and we undercut it, man, I'm going both hands, feet, and ass, just full of NVIDIA. So that's my thought process on this. I think that earnings, again, they're coming out close to March, right at the end of February. It's in a rocky short-term path, but the long term looks very attractive. That's why I'm waiting for much better prices as an AI agent, right? Some of the other things that are on the list includes DRM, but those are things that I'll talk with you guys about in Discord a bit later on if we get a larger downside move. What my thought process for not only swings but long-term positions going into like the next year or so look like, or even the next 10 years look like. But right now, I think adding VOO if we get a large drop heavily is a fair play. But Nvidia, right, is on the radar for sure. I've had some good plays on Nvidia over the past 2 years, and I don't plan on stopping. I think that there's a lot of potential. People are just going to fear monger Nvidia, especially if it drops another 10-15%. If we take a look at Apple next, solid forward guidance, kind of meh earnings. It was okay. It gapped up very nicely over here around 247 before absolutely just getting reversed on the whole day, even closing below the prior day close back into this auction, which I don't love. We were long Apple here based on double leverage AAPU. When I talked about it, it was trading at $29.05. So my fill was around there. So it was pretty good, right? I took some profit. I was also looking at Apple in the 210 area and even potentially down at 195. If we do get this like tech sell-off and whatnot, I think that we do see both those levels, but I think that Apple kind of got shaken up. And if we can get closes that are directly above 240, I think this sees all-time highs again. I'm more concerned with Nvidia than most of the other tech, but as a collective, I have to be more concerned with tech right now because my expectations are that tech valuations are just too stretched and big money just like selling them off so I can buy them at better prices. So I'm just going to be more concerned about where I can expect bottoming. Microsoft kind of sucks, man. Honestly, it's been trading in this massive range for quite some time now. It's created oversold so many freaking times, and I've bought it so many freaking times at the bottom of this balance around 405. But I'm probably going to stop doing that because we keep getting these incremental. We got this incremental higher high, and then we got this lower high here, and we're probably going to come back into that area. I don't know. Microsoft, I'll probably look at it again at like 370 if we trade it. Otherwise, like I'm just going to wait to see if tech actually starts rallying. I think there's more downside in it. I think Meta, Amazon, and Google are the only ones that are like fairly healthy right now. Google was beat down so much before along with no Google mainly, was beat down a lot before last year, right? Last year it had a lot of struggles catching a bid. So right now it's holding a pretty nice bid. So I'm fine with Google, right? I have some long positions. I'm not going crazy over it. If it gets a pullback, it's going to be less extended than the others. And I think that Meta is in a very good position, not only from an AI perspective, but as a cash cow. And Amazon's in a fairly solid position. So I think these three right now that are doing fairly well, I think that their downside is fairly limited. Where if we do get that downside, like I'd probably want to be a buyer again on Meta at like 630, Amazon like potentially down under 220, and then Google under like 190 is fine. Tesla, on the other hand, right, it's creating this quote unquote little bullfight scenario right now. I was going into earnings buying TSLL. I think it's a still valid play, but we have to start closing above this auction top, maybe above 425, above 430 to see that next expansion move. In my opinion, I think that this is a decent low at 380s. I wouldn't want to see it below that area. But right now, again, like I said earlier, I still have caution with big tech. And until they start rotating higher, I'm going to have to not buy this frivolously just in case we get a 10% pullback in the SPY. So let me open up futures here and give you a better understanding there, because I didn't really give too much information on big tech and big tech names other than Nvidia, because again, it's an uncertainty right now to me, and if I'm looking at uncertainties and trying to understand uncertainties, it's just wrong to speculate on that, and I'd rather be a buyer at lower prices, and I think that those lower prices might come out. I don't think that I'm going to be missing too much upside if this is indeed going to be a higher low. I think that larger downside, 10 to 15%, comes at some point this year in the first half, and that's where I want to be positioned at, right? So I don't want to be playing these little shitty games. If I'm buying this, it goes up 5, 10% on double leverage here and there, and I have to hold it for like 3 days. I don't want to do that. So my expectation is I see a little more downside, especially in Nvidia, and the opportunity to buy tech comes out in a few weeks rather than me trying to force it now. So now I'm immediately looking for that downside potential where the turning point could be. And I'm going to be using futures as my guide. This is NASDAQ on the weekly chart right now. So NASDAQ on the weekly, what do I see with this thing, right? I see that we've created last week. What I'm going to be doing is break down the weekly distributions first, and we'll look at the dailies in themselves. So if I look at this, right, we have a major balance here from last week, right? We can say something like that maybe, right? We've got this one as well. And then this is like, it's almost one at the highs, right? It's very, very close to being a triple distribution. But right now, honestly, I just got to give it to the double distribution, right? You've got like one here and one here. So this past week, right, DeepSeek News almost undercuts that early January low. And I'm not going to be surprised if we actually undercut it this week, right? It wouldn't be the craziest turn of events if we do see some downside momentum. Because what had happened was that this is the major balance from the week. We got to move to the upside swing in the last few days where we completed this low auction. We filled the gap that was created from the DeepSeek Sunday overnight. So we got this major balance here. We got another major balance to the lows. And what had happened, we got this pull up, but we closed back within this major balance on Friday, right? We got some of that tariff news, and lo and behold, we're back trading at about 571, 21, 571. The weekly balance holds to the downside. Now, we haven't fully accepted under about 530, but we're pretty freaking close, right? We moved under this weekly major balance. So honestly, if we open up and we're trading down here somewhere on the overnight, I wouldn't be surprised, which pulls us into yet a new balance to the downside move. Anything under 21, about 430, even 21, 530, anything under these two areas, we're most likely going to try and complete some of the downside momentum movement. Like I remain short-term bearish below these levels, and if we actually rebid above them, that's going to be my turning point where I'm going to be like, okay, like bull side momentum. If we do open under this 21, 320, my expectation is we see around 180 to the downside. Anything under, sorry, where's 180? 180 to the downside, anything under that area, right? You start losing 21, 100. You're cleaning this auction, right? You're going to clean this auction. You're probably going to undercut these lows and you're going to start trading areas that are down at 20530, right? 20530 and 20300. I'm not saying that we trade these. I don't want to fear monger all this shit, but like these are going to be the major low areas that you want to watch. My point being right now is that my expectations are that we close or we reopen Sunday lower. It's most likely, in my opinion, going to be under this 430, maybe somewhere here, maybe somewhere here. And unless by tomorrow the reopen, we're not above these distributions that we've left behind, then I don't want to be bullish, right? I'm expecting some kind of movement on the downside on the overnight that gets sold off. And if we cannot move above this 430, if we cannot move back above the 320, be very, very careful trying to buy these dips aggressively and continuously. So, like, if we look at last week, what happened on the weekly, maybe we can, or sorry, the daily, maybe we can get a little more information. So, if I'm looking at this on the daily over here, let's create a little narrative from last week. So here are my balances, right? Like this is a major balance. You know, this, shit, where was it? This is a major balance, or I guess it's a new major balance. This is going to be a key area over here for us. The next major balance, the way that I see it, is like probably somewhere like this, right? With the lows closer to about like here. Let me just redraw that. I think like it's somewhere like this, the way that I have it. And then under that, right, we'll probably be trading down here. And then under that, you have this area here. So okay, what happened here? Let's use a different kind of coloring tool. What's going on here is that you have, this is prior Friday close, right? And then DeepSeek comes out, we gap lower, and we just get crushed, right? Through this auction, through this auction, through this auction, through this auction, just like continuously down, down, down. What happens though is that we have this kind of major balance is split in two, and we close above it. So we peek our heads, we close above it. That's failed acceptance, which causes me to look for some upside momentum going forward, right? Because we get this failed acceptance, we move above this distribution that's bullish. We hold that distribution, right? That's bullish. We keep moving through distributions. We move through this one, right? That's bullish. We hold it as support structure, the low band, that's bullish, right? That's bullish. That's bullish. That's bullish. Then all of a sudden, Friday, we get heaviness of volume that comes in to this distribution top, and we get this like massive move into the close, right? We get this massive move through the auctions to the downside. So the way that I see this is that we've moved through the weekly balance. We haven't necessarily traded the bottom band of it, but we've traded the majority of the heaviness of volume, right? The put in control. So right now, right, my expectations are honestly that we open somewhere down here. I do think that we open under 430. I could be wrong, but based on the information that we've provided and that we have, I think that we kind of lean towards that. Right now, if that is the case, I think on the Sunday overnight, they sell this 530 or they sell the 430 and we start targeting potentially 190 and whatnot. So the way that I see it is that this area, balance low area, I think 21 100 is going to be the first area that I think that the buyer tries. Honestly, if we get this like larger move to the downside, and then we can probably sweep these lows. But I remain bearish until, like I said, we get a move that closes back maybe into this auction or above this auction or into this auction. Whatever the case is, right? I think that overall, we do see a gap down on the Sunday. And I think the first buyers are most likely going to be at 21 100. Where we could see, right, this kind of shittier auction get filled. We fill some of this stuff, but we kind of stay intact with the heaviness of volume that transpires over here and the bottom of the lower band balance from the weekly profile itself. How far does that go? That's a very good question. I'm going to have to play it by ear going into the week. But right now, I think the expected downside momentum is a bit more expect, well, I guess like a bit more likely in a sense, where they try to sell rallies on the overnight and then we find some kind of bullish pressure maybe at some point this week, but if we can actually close above auctions higher, right? So what I'm trying to say here is that if we reopen under 430, watch for 21,100 for a bounce. But the only way that I'm going to start switching bullish this week is, let's say we do open under here, is that we start moving and closing back above the 430, back above the 530, or if we move down here somewhere, right, we want to close back above the 180, 200. So until then, right, just sell rallies into these auction areas. So under 430, under 530, under 320, under 180, and then the first bounce around, I'm gonna probably try 21,100 to see if we can see those longs, and then we'll go from there. If we do the same thing on the ES here, I know this is pretty long. It's been over an hour, I think, at this point, but let's look at the ES quickly, and then we'll wrap things up. If you guys have any questions, let me know. But where is it? Where's the weekly on the SPOOs? Weekly on the SPOOs, right? Again, same situation, same derivative. We have pretty much a double distribution, very, very heavy volume here on the S&P. And I think that right here where this low volume is, 20 or sorry, 60-10 area is going to be the most likely first bounce of attempted buy side that comes through. But I think that cleaning up this auction and potentially cleaning it all the way down here, this would be a major area for a higher low to actually get presented, and then see if we can bid back into these distributions. So it's the same concept, right? Like honestly, I don't know where it could open up, like maybe down here at the 60-40, 60-30. But I think that this area, right, there's going to be a potential buyer that steps in, but just watch for the clean of the auction before anything else happens. It's the same concept, right? If I move under this auction, my long thesis is when we start closing back above that auction, like we saw last week. If I am under this balance, right, this major balance currently, right, I think 70, 69 is a shortable area to go and target that 30, right? Under 30, 40, I think it's a shortable area, so on and so forth until we get that flip in terms of these distributions. But I think that 60-10 is the first initial target for the buy side, which seems like pretty far, but I think that if we can go and fill that, come into that low volume area from the weekly, um, I think that's where a buyer might sit and stay things out. And then when we look at it from the top of the balance, 59.90 is another area. But let's look at this from a distribution perspective, right? We had this major balance, like I don't even know where it is, like here somewhere. And then we had the other major balance over here. And then we have these like minor areas like, okay, boom one, boom two, and then boom three, also weekly balance low, and then major balance to the downside. So the way that I see this is like, I don't know where the gap is going to be, but I think that, I don't know, we probably open up here somewhere. I think they sell rallies potentially all the way down into this area where a buyer can't come in. I don't know how far it's going to come in, but the expectation is that if we can come down and clean some of these balances, you want to sell until we close back above this area. If we make a move under any of these areas and close back above, especially if we can close back above this area, I think that we're on for those highs. I thought we were on for those highs after we made these like turning points this past week and we were looking all hunky dory for the buy side, but I guess those like Trump tariffs had to come out and really nuke things down. Because like we got this like extended move on the Sunday. We created this balance on the Sunday and we closed just above this major distribution, the upside momentum. So okay, fair enough, right? We see the top of the balance is around 610 area, right? This was my best trade of that day, just continuously buying around 14. And it created this normal distribution after we held the top of the prior balance. The top of this balance over here is around 60-30. We held that extremely well, right? We get a little offer and we rebid back up. Okay, we move back above this balance. It's pretty bullish. So my expectation is we hold this balance or we can hold somewhere here, right? We move back up, we close above. My expectation is still that we can hold this balance so we can get that momentum higher. We close back above here. My expectation is that we can hold this balance so that we can move into here and then potentially, like maybe higher and hold out. However, boom, This gets triggered, breaks this balance, breaks this balance, breaks this balance. And now we're most likely going to gap lower, meaning you want to sell rallies into 60-70. You want to sell rallies into 60-50. And you want to target 30, you want to target the 10 and potentially the 59.90. 59.90 and 610 are the two areas where I do expect some kind of a bounce before some more sell side might come out closer to the 70, closer to the 50. But these two areas, I expect the bounce. Anything under this and we close under this, honestly, just keep selling rallies. So that's all I've got here. It was very long-winded of an explanation. I hope it served you well. But let me know if you do have any questions about this, as I'll stop this recording. And that's mainly what I want to prepare for with the week ahead.